Good evening, everyone. I'm Daryl from the Outreach and Partnerships Department. So earlier in my career in CPF Board, I had spent considerable amount of time working at the CPF Service Centre. So having attended to so many members on CPF retirement, I understand how reaching this milestone of age 65 means to all of you. So for you who are tuning in now, you might be in your 60s, either approaching 65 or may have already reached 65. So 65 is actually a major milestone for each and every one of us. And at this particular point in time, you'll also be joining CPF Life soon. So in today's session, we'll deep dive into how CPF Life works. So when we talk about retirement, right? So we always think, okay, what do we need in retirement? So basically, CPF actually covers the three needs. Okay, so as you can see, at the base of the pyramid itself is housing. So why housing though? So housing acts as a foundation so that we have security in our retirement days. So we don't have to worry about things like rental expenses, especially in times of uncertainty. There's worries about your mortgage payment, especially when interest rates keep going up, right? So it will eat into our retirement income if we need to continue paying and servicing our mortgage. So the home ownership forms as a basal foundation so that you do not have to worry about having a roof over your head. Right, and when you reach 65 or in your retirement age, so there are actually two schemes that I'll cover later as well, which is the silver housing bonus as well as the lease buyback scheme. So these are two schemes which you can utilize to monetize and increase your retirement payout. And next will be the healthcare financing. So for healthcare financing, we all know that CPF supports us in terms of Medishield Life as well as Medisave. So Medishield Life is a basic health insurance to help us pay for large medical bills. And it also offers additional benefits and coverage such that for things like chemotherapy, those long-term care kind of illnesses and bills. So Medishield Life actually helps to take care of that. And for those who want to enhance their coverage, they can consider purchasing a private insurance known as the Integrated Shield Plan. And Medisave can also be used for other outpatient treatments as well as your premiums for CareShield Life. And now today, our focus is actually on retirement income. So in our retirement days, we want to have a steady stream of monthly income to basically pay off our daily expenses. So things like food, transport. And we want this income to be stable, right? Because food and transport, they are all necessities and it forms a part of our daily expenses. So we want this to be as stable as possible. And so CPF supports you in that way to provide you a stream of monthly income that never ends. That's for life. So later I'll also dive deep into CPF Life and how it can help support you in your retirement. So when we turn 55, all right, and as I think some of you who have turned 55 some time back, so when you turn 55, the retirement account would have been created for you, and the interest rate on the retirement account, the base interest rate is 4%, okay, which is the same as the special account for those below 55. And how CPF supports you is that CPF provides an extra interest. So for those 55 and above, you actually earn extra 2% on the first 30,000 of your combined CPF savings. And the next 30,000, you can earn additional 1%, right, on the next 30,000 of your combined CPF savings. So essentially, this will help build up your retirement, and so you can enjoy a better payout later on. So let me illustrate to you how this extra interest actually works. So for example, if your retirement account, you have a total of 88,000, your ordinary account 5,000, and Medisave 50,000. So this is how it works. So the first 30,000 in your retirement account earns 6%. The next 30,000 will be 5%, and balance 28,000 will be 4%. Right. So then in this scenario itself, all the extra interest are earned on the retirement account savings. Your ordinary account and Medisave account will still earn the base interest rate of 2.5% and 4% respectively. So now I want to do a quick poll to understand um, this age-old question. How long do you think you will live until? So I think there's always a lot of people, ask you, how long I can live until. Um, we may have this figure in our mind. So I want to look at the audience here today that's with me to see roughly what's the census like. Okay, I see most of you have responded, 200 plus responses. Okay, we'll give another 10 seconds. Okay, so I see most of you have indicated that you can live about 80 to 89. Okay, okay. Thank you for sharing. So this is will lead to the next question lah. So the next question will be, how do you derive this answer? So most of you mentioned that you can live until 80 to 89, right? So I want to know, how do you actually derive this answer? Okay, some of you mentioned, okay, that it's based on how long your parents and grandparents are. Okay. I recall my grandfather telling me also that time when he was in his old age, he was telling me, okay, my parent was able to live to 85. I should be about the same as well. So I mean, yeah, there's something relatable, and some of you will look at statistics, and some will be based on current health. Yeah, I mean, there's no right or wrong answer. So all these are actually valid. Thank you for sharing. So what I would like to share with you is, okay, we go back to the stats. So here is, so we all know that life expectancy has been increasing. So based on statistics is, for a male age 65 today, 50% will be able to live past 84. And for a female age 65 today, 50% will be able to live past 87. So what this means is that female have longer life expectancy compared to males, right? And so I mean, this is something that is been commonly communicated out there, So, but the crux of the issue is that we do not actually know how long we can actually live till. So there's this uncertainty. So in most cases, people underestimate actually how long they live, and they do not actually set aside enough. So because the truth of the matter, we can say that our parents live to this age, or maybe due to a particular health condition, you think that you live to this age, but truly we cannot predict how long we'll live and how much we actually need for our retirement. So there's this worry that if your retirement savings actually run out when you're old, and then when you're not working, then there'll be an issue, and it'll be a concern for you in your retirement days. So when you're faced with this dilemma, then that's a problem as well. So the other concern is that you may be saving all your savings, your hard-earned monies that you have accumulated during your working years. You have spent all this time saving, but then in your retirement age, you decided to eat, okay, every day I just eat maybe a minimal porridge with sweet potato, for example, just to try to keep your savings, stretch your dollar. But then you actually deprive yourself of this hard-earned savings that you have accumulated over your lifetime. And so the answer to this dilemma is actually CPF Life. So with CPF Life, you don't need to worry, because with CPF Life, you can continue receiving a retirement income no matter what age you actually live to. So CPF Life, just quick check. Do you all know what's the term life stands for? It actually means lifelong income for the elderly. So this is actually a national annuity scheme that insures us against running out of our retirement savings by providing an assurance, so such that your monthly payout will continue to pay. You will continue receiving your monthly payout no matter how long you live. So unlike investment products, okay, for CPF Life, this is an insurance product. So it actually insures us against life uncertainties, and in this case, against longevity risk. So here we can see how CPF Life actually works. So CPF Life you will choose your plans at age 65, but at age 55 itself is everything where everything kicks into motion. So what happens is that at 55, remember I mentioned earlier, the retirement account is open. And so what happens is that your special account savings as well as your ordinary account savings will be transferred to your retirement account. So once it's in your retirement account over this 10 years itself, the money will continue to grow, continue to work itself because of the CPF interest. And at age 65 itself, that is where you can start your payouts. So if you have at least 60,000 in your retirement account, when you start your payouts between the age of 65 to 70, all right, you'll be enrolled automatically on the CPF Life. That's where you need to choose one of the CPF Life plans. However, if you do not select a plan by 70, then CPF will automatically enroll you on the CPF Life Standard Plan, and you will receive your monthly payouts for as long as you live. So to illustrate to you, you can see the money bags on screen. So with your premiums that you have committed to CPF Life, you will continue to draw down your monies, and even after your own savings has been fully depleted, CPF Life continues to pay you your monthly payouts. So now, next question. How much do you think you need every month in retirement? I'm curious to know. Okay, I see your responses coming in. Oh, a lot of people have chosen more than $2,000. Okay. Yeah, I mean, we have you have to spend on food, transport, and maybe occasional holidays, right? Yeah, okay. So far, 77% has responded. Okay, thank you for sharing. So, majority of you have actually mentioned that you want a payout of more than 2,000. So, in the coming slide, I'll illustrate to you actually how much you will need to save to achieve your desired payout. So, your monthly payouts in retirement. So, if you can see here, at age 65, you actually need this 319,000 to have a payout of $1,700. 1,600 to $1,700. So looking at this figure, it may be daunting, it may look quite large, but the good news is that at age 55, if you are able to set aside this year's full retirement sum, which is 213,000, this amount will actually allow you to receive your monthly payout of 1,600 to 1,700 every month. So what this means is that if you start early, means at age 55, if you have this amount in your retirement account, you will need to put in less in your retirement account to catch up if your desired payout is 1,600 to 1,700. And for those people who wants 2,000 or more, then you can consider topping up to the enhanced retirement sum, and that will give you a higher payout. So in the process of planning for retirement and thinking about the retirement lifestyle that you want, so there's also a need to take into consideration, especially the rising cost of living. So cost of living can have actually a huge impact on your expenses in your retirement. So as you can see here, what a basket of goods that requires $1,000 requires $1,000 today will actually cost 1,500 20 years later. So what this means is that as time goes by, the amount, the purchasing power that you have with your current payout and savings will decrease, because from year to year, as the price of good increase, so that will weaken your buying power. So inflation, so this term inflation actually eats away at your purchasing power, and you need to end up affording less over time, and you need to pay more. So what can you do actually? So here we talk about the CPF Life plans. So here are the three plans. So we'll talk about the escalating plan first. So earlier we talked about how inflation actually takes away your buying power as things get more expensive. So if you're worried about things being more expensive, especially in the coming years ahead in your retirement, and you want something that can keep in pace with inflation, then you may want to consider taking the escalating plan. Because for the escalating plan, its payouts will increase by 2% annually. So for example, under the escalating plan, a monthly payout that starts at $1,000 when you start at age 65 would reach approximately 1,500 when you reach 85. So, so roughly you will know it will be able to help you keep pace and maintain your lifestyle as the prices of items increase. However, if you prefer to keep something to a fixed budget and you are okay to buy less as things become more expensive in the years ahead, then you may consider joining the standard plan. Because for standard plan itself, it starts with a higher payout, but the payouts you receive will be level. And lastly, we have the basic plan. So a basic plan is what we call a legacy plan. Okay, a legacy plan means this basic plan, it came from the previous generation of CPF Life plans that was launched initially back in 2009. So for this particular plan itself is that your payouts will start lower than standard plan, and then when your combined CPF balances fall below 60,000, that's where you see your payouts drop further. And now I'll dive deep into how each of these plans actually works. So for the CPF Life escalating plan, so for a member who has already accumulated your full retirement sum at age 55, this full retirement sum will be retained in a retirement account. So for 55 to 65, there's 10 years a duration to earn the interest. So upon reaching 65, the amount in your retirement account will have grown with the interest itself. So this entire amount, the full retirement account balance, will be transferred into what we call the CPF Life pool. As from that point onwards, you will start receiving your monthly payout, which will pay you for that. For example, if you have 319,400, it will pay you about 1,002 to 1,003, and this will be for life. And each year itself, it will increase by 2%. So for example, this means that your payout will continue to grow, and your estimated payout of 1,008 to 2,030 at age 85 will actually grow to about 2,002 to 2,004 by age 95. And this actually continues to grow. So meaning to say that if you live till about 100, 110, this amount will continue to grow year on year until the member reaches the end of life. So for the CPF Life Standard Plan, similarly for a member that has accumulated the full retirement sum in the retirement account, the full amount will be transferred into the life fund itself. So from that point onwards, you will start to receive your monthly payouts. Similarly for life, just that for standard plan itself, as mentioned earlier, your payouts will be paid to you yearly, sorry, monthly, but then the payouts will be leveled, meaning to say year on year, you will not see much changes in your payout. So it's a level payout. And next, we'll talk about the basic plan. So for the basic plan itself, upon choosing the basic plan, what will happen is that 10 to 20% of your retirement savings will be transferred into the CPF Life Fund. The majority of your savings will still retain in the retirement account. And what this means is that you will start receiving your monthly payouts from the retirement account first. So upon depleting your own retirement savings, that is when you will start drawing monthly payouts from the life fund. But to assure you, for basic plan, even after all your savings has been fully depleted, you will still continue to receive your monthly payouts, even though you only 10 to 20%, you think 10 to 20% has been transferred to the life fund. So how does CPF Life provide you with payout for life? So for CPF Life itself, after your retirement account savings has been deducted as CPF Life premium, you will receive your CPF Life monthly payouts. Okay, so when your life premium is fully depleted, monthly payouts will still continue because you have interest in the pool that is actually pulled together with all CPF members. And that's how the CPF Life pool actually sustains. So for a member who is on CPF Life Escalating and Standard Plan, the 100% of the retirement account savings are in the life pool. Then upon passing itself, any unused premium will then be paid to your beneficiaries. Likewise, for the basic plan itself, although you have committed 10 to 20% into the life pool, upon passing, all these monies will also be refunded to your beneficiaries. So for members who are not included in CPF Life, what happens is that this group of members are members who are born before 1958. So they are under this plan called the retirement sum scheme. So they are not automatically enrolled into CPF Life. However, if they are below age 80, they can consider to join CPF Life at any point of time, just that the criteria is that they have to be below age 80. So if you're not on CPF Life, so how are the payouts actually computed? So it's designed to last up to 20 years. So if your payout eligibility age is 65, then it's designed to last you from 65 to 85 with the extra interest to cover you up till 90. So do take note that for members who are not under the CPF Life plan, what will happen is that if the monies are fully depleted, then the payout will actually stop. So we encourage members to join CPF Life to enjoy a lifelong money payout. But to join CPF Life, you need to be below age 80. So we have a next poll coming up. So how many of you want to opt out of CPF Life? Because as mentioned earlier, CPF Life is able to give you a lifelong monthly income, right? So if you are choosing to opt out of CPF Life, I suppose you have your own reasons, maybe your own annuity plans out there. Okay, so 95% of you have decided that you will prefer to stay on CPF Life. Okay, that's heartening to know. And so the question is, can you opt out of CPF Life? The answer is yes, but only under certain conditions. So if you have a pension or private annuity, or you have an annuity plan that gives you monthly payouts that's higher than the CPF Life standard plan, then what you can do is you can apply for exemption. So this means that you do not need to set aside your retirement sum for CPF Life, and you'll be able to withdraw all your retirement savings. So to be eligible for applying for this exemption, you need to be 55 years or older. You must be already receiving these monthly payouts from your private annuity or pension. And you must be both the policy holder and the sole insured person under this annuity plan. So does CPF Life payouts include interest? Okay, I see. Okay, majority saying yes, some saying no. Okay. So this is actually a very common question, whether CPF Life payouts actually factors in interest. And the answer is yes, it does. So if you join CPF Life itself, the amount that you have paid for the premium, right, for that's being transferred to the annuity pool, we have already factored in the interest for your life payout. And so I'd like to cover this slide, which is how CPF Life compares with the private annuities. So here you can see the differences between CPF Life and private annuities offered by private insurers. as covered by Mr. Christopher Tan from Provident, where he compares CPF Life with three other private insurers. So you can see in all four plans, the similar amount of premiums of about 210,000 is committed. But while private insurers may project returns that actually are a higher percentage compared to CPF Life at 4%, you can see that for the similar amount of premiums, CPF Life remains higher than that of private annuities. This is because CPF interest rates are at 4%, right, plus the extra interest that you earn when computing for payouts. There is actually no profit margins or commissions involved in you joining the CPF Life plans. There's no additional deductions. So I'd like to know, how convinced are you that CPF Life payouts are better as compared to private insurers? I see. Okay, I managed to convince like about 70+% of you all. For those who are neutral, you can also refer to what Christopher Tan has uncovered in his article. Yeah, to find out more about how CPF Life plans stand up against private annuities. Okay, and thank you for the poll. And we have 71% of you who are convinced. So after showing you the comparison, we hope that we have shown you some insights about how CPF Life stands against the other plans. Next, we'll be touching on how to actually achieve a higher monthly payout in your retirement days. So here are 4 tips to enjoy higher monthly payouts in your retirement. So basically is to reduce your outflows and boost your savings through top-ups, start your payouts, and monetizing your property. So how to reduce your outflows? You can use your part CPF and part cash for your housing mortgage, or when investing your CPF ordinary account, for example, and special account in your younger days, right? And for those of you who are already above 65, if you have existing monies in your ordinary account, if you are investing in under CPFIS itself, then we hope that you know what you are investing in, especially do your due diligence, because otherwise, if there's any loss, it will also impact on your retirement savings. And then, since CPF offers stable interest rates, then we suggest that you withdraw your CPF savings only when needed. So boosting your savings through top-ups, okay, you can actually do so by doing a cash top-up or a CPF transfer. And for those members who wish to top up to the enhanced retirement sum, take note that the amount is 426,000 today. And this enhanced retirement sum has been recently enhanced, especially this year, the start of the year, where it's now 4 times the basic retirement sum from this year onwards. So as we all know, the special account has been closed, and monies from the special account were channeled to the retirement account up to the member's full retirement sum, and any balances were transferred to the ordinary account. So for members who wish to top up further to the enhanced retirement sum to enjoy higher payouts, you can do so. So as mentioned earlier, you can top up using cash and CPF transfer. So for CPF top up by cash itself, you can top up 8,000 to yourself for tax relief and another 8,000 to your loved ones to build up their retirement savings. And in total, you can benefit from a tax relief of 16,000. And if you or your recipient is eligible for the match retirement savings scheme, for these eligible seniors who have met the criteria, the government actually match dollar to dollar up to 2,000 and 20,000 over a lifetime. However, with this new enhancement for MRSS, the first 2,000 that the member receive as top up, the giver will not receive any tax relief. So this is something to take note, a change for this year. So the next way of boosting your savings will be through the transfer of your CPF. So from your ordinary account itself, you can transfer to your retirement account. Since most of you should be already above 55, so you can transfer your OA to your RA to earn the higher interest of 4%, but do take note that these transfers are irreversible. So ensure that the monies you transfer are the funds that you do not need for payments such as your housing loan installment, your home protection scheme payment, etc. And there's no tax relief for CPF transfer. The third way of boosting your payouts will be to defer your payouts. You can just start your payouts as late as 70 years old. And for each year you defer, your payouts will actually increase by up to 7%. And this will translate to higher monthly payouts when you decide on starting your payouts. So for example, if you were to defer to 70, you see in the slide itself that the payouts will be higher, and these higher payouts will be for life. So earlier I mentioned there's two housing monetization schemes, right? So the first one I'll be talking about will be the lease buyback scheme. So for this scheme itself, both owners, actually all owners of the property has to be aged 65 and above to participate in this lease buyback scheme. And what this scheme does is that you sell a tail end lease back to the government, and then in turn, the monies are used to top up your CPF, and you also receive a cash bonus. So this actually helps you to achieve and attain a higher payout under the CPF Life plan. The next housing monetization scheme is the silver housing bonus, whereby you right size your property. So in the process of downgrading and purchasing a smaller flat, you also unlock cash proceeds, and these cash proceeds are channeled to your retirement account so that you can receive a higher monthly payout under CPF Life, as well as you get a cash bonus from this silver housing bonus as well. So how do you get the payouts you want? So think about the retirement lifestyle that you want. Think about the reality of inflation. So once you have an idea of how much you need for your future years in retirement, you can then better select a CPF Life plan for yourself. So as mentioned, there are 3 CPF Life plans to choose from: the Escalating, Standard, and Basic. So the next step is to estimate the monthly payouts that you need to support this retirement lifestyle you want using the retirement payout planner. And it will help you to work out the CPF Life premiums to pay under your preferred plan. So how then you need to determine if your retirement savings are actually enough. So are you short on CPF savings to pay the premiums required for your chosen CPF Life plans? Then you can boost your savings by making cash top-ups or even CPF transfers to your retirement account. So here is the QR code to try out the retirement payout planner. For those of you who are already above 65, then this retirement payout planner will not be applicable to you. Okay, so I'll let those below 65 to scan this QR code. Okay, for 5 seconds, and okay. For those of you who are already reaching 65, means 3 months before 65, or already above 65, then you should use this service called Plan My Monthly Payout service. This service itself will show you basically the most accurate payout based on your current retirement balance. So you can try out this by scanning the QR code, and you can simulate the different plans, the type of plans that you want, and it will show you the corresponding payout. Okay, so we'll come to the end of the presentation for the retirement portion. Next, we'll be talking about nomination. So I have a poll on screen, and I would like to know from you, have you thought about who you want to give your CPF savings to when you pass on? Okay, majority have said yes. I hope you have done your nomination. Okay, and I think 3% say not important to think about this time. Actually, it's actually good to think about it because I'll share the benefits with you in a short while. So now I would like to know, have you made your CPF nomination? So those of you who have said yes earlier, right, that you have already thought of who you want to bequeath your CPF savings to. So have you done your nomination? Okay, majority have done. And about 10% of you have not done so. Not to worry. Later, I'll be flashing the QR code for the CPF nomination, and then you can start thinking and also begin this thought process of doing your nomination. Thank you for sharing your answers. So, what is a CPF nomination all about? So, it's actually an arrangement that allows you to specify who you want to give your CPF savings to upon your passing. And here's a fun fact. Do you know that more than 2 out of 5 CPF members have already made a nomination? So as you can see, majority of you have already made nominations. So about 10% in this audience have not. So for those of you who haven't, I hope you'll be convinced to do so after this session today. And for those who have, it's good to review your nomination, especially when you, especially at different stages of your life. So the CPF nomination will basically distribute your CPF savings to your nominees according to your wishes, and by default, this payment will be in the form of cash. And by doing a CPF nomination, there's actually no fee involved, it's free of charge. Because without a CPF nomination, what will happen is that upon your passing, your CPF savings will be distributed to the public trustee office, and then based on the inheritance or intestacy law, they will transfer them to your family members. And in doing so, there'll be a statutory fee that public trustee office impose, and this will be taken from your savings. And the process of administering these savings will also take up to 6 months. That's in addition to the statutory fee. So what does a CPF nomination actually covers? So simply put, uh, for you to remember easily, whatever monies that are within the CPF system itself, so the ordinary account, savings, special, Medisave, retirement, your unused CPF life premiums, as well as discounted Singtel shares that are held with CPF. So what's not covered are your CPF that you have used to purchase a property, your your DPS insurance, as well as monies taken out from CPF for investments under the CPFIS. So for DPS itself, you can make the nomination with your insurer. Currently for DPS, the sole insurer is Great Eastern. So if you have not done your nomination, you can also proceed to Great Eastern to do so. So when to review your CPF nomination? So this is for those of you who have already done your nomination. We encourage you to review your nomination from time to time. So here are some key life events. All right. So marriage. So upon the marriage, your previous nomination that you have made before the marriage will be automatically revoked. So this is very important. So after a marriage, we will encourage you to make a new nomination. This is because once it's revoked, it's treated as there's no nomination at all. And in cases of divorce, birth of children, or the unfortunate passing of a nominee, so these are other different life stages that you consider to amend or review your nomination. So here's the QR code for making a CPF nomination through our online service. So one thing to take note is that if you are making a nomination online, you need to find 2 witnesses. So the witnesses cannot be your nominees. Okay, so you can find your family, your friends, your colleagues, anyone, but they cannot be your beneficiaries. They cannot be your nominees in this CPF nomination. So once you have completed your nomination, your witnesses will actually be prompted to log in with their SingPass to authenticate, and thereafter you will receive the update to say that the nomination has been updated, and you can review these details in the dashboard.